Hi, everybody. Welcome back to the Weekly Hunt. This is a weekly podcast with me and ERD. But the markets have been very, very difficult at the moment, very volatile. There's been fake breakouts in some sectors. I think there's rotation still happening. Tech is still suffering. Software is still dropping. And we want to just discuss the situation in the markets and cover it here for you guys. Maybe giving you guys some pointers on how we're maneuvering in the markets and how we're protecting our capital first and foremost, and then looking to make some money in the markets as well. Hi, Erdi. How you doing?
Hi, Andrew. Yeah, I'm doing fine. The market has been very volatile, very fake breakouts, as you said. I think the most surprising thing has been tech, the software. I thought Palantir had a huge potential for an upside, but it got obliterated in the last few days. So I was discussing with Henry about a potential Palantir call, but we did good to not
Yeah.
follow through with it. So it has been pretty rough out there, but we have played it safe, as we said last week. Utilities, healthcare has been our play, and maybe some daily. Well, we play them monthly, but the move has been daily on options,
Yeah.
like Reddit, which was a great one. It went to 150 and now is back to 120, I think, pre-market. So we got that wave. So it has been a very volatile. We expected more from a bounce back as we want to get to mean revision, but the market is still selling off. I think a lot of companies have brought their 200 daily average, moving average. So it is a pretty tricky situation. The economic news has been good. Did you see the job data? I thought they were pretty good, but the market got a little bounce, then it
Yeah.
came back down again.
Yeah. The job data was pretty good, but I think the fear in the market is interest rates. So if the job data is good, it could kick the ball a little bit further, maybe another
Inflation was
two,
good
three
too, I
months.
think.
Yeah. And then what were the revisions? Because you were talking about the revisions earlier. Did you see them as positive or negative?
I mean, revisions are bound to happen, but there had been like 4 or 5 revisions this year that always have come lower from job data.
Yeah.
That is the tricky thing because the data that comes, for example, 130,000 that came out this week gets revision to 50K after 5-6 months. So it is hard to believe the data. That's why the market is like this, I guess. So
Yeah.
the last revision was from 50K to 48K, which is like 2,000 jobs less. So that makes a pretty big difference. It is like 2-3% lower than estimated. So this is the margin of error that people are predicting the future with. So that is what makes the market tricky, in my opinion. And this has hit more tech because the PE ratios have been crazy in tech industry. I think
Yeah.
Palantir was like 200. Now it's still to 100 PE. And it has been you can pick a random tech company and you will see like over 50 PE ratios everywhere. So it has been rough for investors to pour money into these industries. On the other
Yeah.
hand, healthcare has been a better solution for people to play it safe, I think. Dividend companies, which has a slower PR and safe investments for 1 month, 2 months. So yeah, pretty much this is my analysis, I would say, for this month of February. Seems everything
Yeah.
is going to safety.
Yeah, I agree with you. One of the things with me though is I'm looking at between December until now, we've seen money flowing into energy, like you said, healthcare. There's also been basic materials. We've had the industrial sector also see some movement. The problem I'm having now is there was a weak tech sector, semiconductors fairly weak and flat, and then we had weak software. And then I felt like the market was being held up by the energy and these rotations happening in the other sectors. But yesterday we ended up seeing a sell-off in all of those rotational sectors like energy, basic materials, etc. And that, in my opinion, has shifted the market into a bearish leaning market overall. So I'm looking at when I look at the Nasdaq 100, when I look at the S&P 500 as well, because of the lack of the rotation in those sectors. When we saw a sell-off yesterday, I think the broader market now might see a sell-off of around 5 to 10%, and there'll be a clear correction. I think this is one of the main reasons why we're seeing everybody saying that the market now is going to go short and there's going to be a market correction, and we have to be very, very cautious with when we buy. Like you said with Palantir, although it looked cheap and it could do a mean reversion and we could trade that as a call, we ended up not doing it because it just it wasn't right. It wasn't set up. And even Reddit, we traded it within the day. The next day came back down. So we were quite fast on that trade. And if we weren't as quick and nimble and as quick with exiting that trade, then we probably would have suffered a loss on that, in my opinion. Yeah, nothing's really working, in my opinion, in the markets right now. Momentum's just not there. And yeah, it's just, for me, it's been moving to cash mainly.
Yeah, I mean, the huger risk is crypto. For what I've seen, all the crypto people have gone radio silent.
Yeah.
We've been talking. There is no, guys, be careful, since October, and people have poured money in every way, I feel like, in crypto, and now they are feeling the consequences. So it is a really tricky market. I think, as we said last week, April, it's probably the month when we shall see maybe some improvement. I think February, March are really volatile, a lot of sector shifts, priorities changing, the Congress in America updating policies and stuff. So it is really tricky. I think there are elections this year too in America for the Senate or Congress. I don't know their political system. So people maybe are expecting some volatility even with elections. So I think our strategy of these past few months, playing it safe. I mean, in my portfolio, I've done like 8-9% for the first 2 months, which is not a lot, but S&P is crashing, Nasdaq is crashing. So I think we're doing pretty decent.
Yeah, exactly. Protecting our portfolios and preserving our capital has been the main focus. For me, in reality, it's been since October. So it's been a long time since I've felt kind of enthusiasm for the market. I'm not as enthusiastic as I was when we had the nice move from April all the way up to August and September. And yeah, it's a tricky market. We did do quite well with some of the options that we traded. ERD, we ended up trading Zoom, LOW, and the aluminium play AA as well. And those kind of moved fairly well, but they sold off quite quickly. Again, options have been working a little bit better for me than swing trades because there's no follow through for the swing trades for the market to go to higher highs. The key problem that I see in the markets from a technical perspective is 7K. There's a big wall there with S&P. And every time that area is hit in the last... Yeah, so there's also this technical barrier in the markets. And I think when we look at stocks and when we look at the broader market, we don't really see opportunity. And that doesn't make traders and investors enthusiastic about buying, whether that's buying the indexes or that's buying an individual stock. We're not seeing opportunity. We're seeing just overpriced stocks. We're seeing, I think, maybe the end of the bull market or maybe near the end of a bull market. So that's the reason why we're in this situation. Then we discussed some of the macros. We discussed employment. We discussed the kind of the shifts that happen in the US as well. And then we also have the seasonality of February always being one of the worst months. Just like last year, we had a bad period in February. So yeah, it's not looking that great. It looks like we were going through a distribution the last 2 months. And in my opinion, we're going to get a correction, and after the correction, we'll be able to find some good opportunities. For example, like Palantir, when it starts reversing, I think it'll be an amazing opportunity for us.
When it starts to reverse, maybe a war or something, and it's go back to 200, it's like a 100% trade
Yeah.
with
Yeah.
basically zero risk because it is backed by US, it is backed by every big company, and it has become a critical part of the American infrastructure. I feel like that's why the valuation went from like $7 2 years ago to 200 at its peak. So it
Yeah.
has been
Yeah.
a really successful company. Now we wait for the reverse to see the pattern forming because things don't set up like V shape a lot in the stock market. We have distribution, as Henry said. We have the period of accumulation when the retail has to sell because it's becoming unbearable to see the red bar in their phone and portfolio.
Yeah.
So yeah, pretty much that would be the ideal part to enter. Now we play it safe. Henry has some dividend stocks which pays him 1% per month, so that's perfect for him. As I've said, I've been to rental stocks which pay monthly dividends too, and healthcare which have been pretty good. And we are chilling for a moment.
Yeah.
The broader economics look rough, especially with job data, as we said. Inflation came down, which makes people that love lowering interest rates go bad. So that's the point.
Moving forward for next week, are you looking at any opportunities? What are you looking to do from your end? And then maybe we can give some pointers to the viewers.
For the moment, I'm just waiting. I have my portfolio, as I said, only on these kind of industries. Oxy, as I've said, is very interesting to me still. It went from 42 last week to 46 this week, so it was a nice bump. I still like it as a stock. Pretty much, oil is pretty interesting to me. VST, which we have talked, has done pretty good when all market is
Yeah.
red. VST has been green, so it's really cool to see. Yeah, I think from tech side, I'm just waiting. PayPal has been on my radar, but it's getting crushed every week. It feels.
SoFi as well on my radar. SoFi.
SoFi, we've talked about SoFi too, has been struggling. Let's see, CrowdStrike, I think it's that company which offers security, cybersecurity. It's another one it's pretty cool, but as we've said, we wait the falling night to fall, then we pick up the pieces.
Yeah, for sure. From my end at the moment, I'm just looking at potentially shorting a few ideas. So maybe I was looking at Ford, I was looking at Meta, but I'm not too sure about Meta on 100%. But Ford seemed quite nice. If we do see a break from the ascending channel they has on the chart. Also, we've shorted the Nasdaq on the CFD group, so the intraday desk that we have in the community. We have ended up shorting the Nasdaq yesterday, so we're up around 2% on that one. We initially actually got caught on the long side because there was that initial breakout the last few days, and then we flipped it to the short side, and we've been able to accumulate some profit there. And just holding that, and then looking like you already said, looking for some opportunities on the reversal here. So you're looking at cybersecurity as a great. You can even trade the ETF as well, which is HACK. That ETF, you're trading cybersecurity as a whole, or I'm looking at CrowdStrike, Cloudflare, and FTNT, those three stocks in that industry. Robotics could be quite good as well when it reverses, because I feel like it's not just software that's suffering, but you're seeing all these other sectors in the tech industry. And then for always on the reversal, I'll be looking at the quantum plays because I think those will be flying and there'll be high volume.
Those fly a lot when
Exactly.
the hyperoptics goes.
Exactly. So, there's those three industries I'm definitely looking at. And then I really like Dell and SMCI when the reversal comes in. So when we're talking about semiconductors, those are the two stocks I'm looking at from that side. And then software, we'll just have to see, which one's set up. But Palantir is definitely on my radar. Robinhood, SoFi, those big names that were previous leaders that are getting crushed right now. We'll be ready, and we'll be ready to trade them on the reversal. But in the meantime, I'm just holding a few utility stocks. and some plays that have moved quite well for me, the rotational plays, but they're not performing, amazingly. And then this coming week, I don't have my options list yet, so I haven't really created a list of options that I want to be trading, but we'll be sharing that in the community, and obviously the listeners can go and join the community with a link below
I
in the
think
description of the video.
some interesting might be uranium industry again, the ETF.
Yeah.
Maybe we can see that because last time I think it was during this period when the uranium got hype. So it
Yeah.
might be a play now with rotations. So
Yeah, I agree
something
with
to
you.
see.
I agree with you.
Yeah.
Yeah, I think software will do well, but it's just going to take time as well. That's one of the things I
Yeah.
want to be watching. No rush. It's for
If
me.
people have
It's
capital and want to invest now and wait until we reach again this price and higher, it might be a play, but to cost average down. But our style is buy near the bottom or when the trend starts to reverse and get the profit up. I think playing with puts is kind of dangerous in these areas because these are the areas where it can flip too fast. To see puts, puts would be good at the beginning of the week. I think would be pretty good, but we are kind of late now.
Yeah, I think it would have been good, but it was very risky as well because we were seeing some momentum in the Nasdaq and the S&P, which could have led to a breakout above, but it failed. And of course, it would have. I think it would have been good maybe Wednesday. Wednesday would have been a good time to have
Tuesday
some puts, but then
afternoon, Wednesday.
yeah, but it was a 50-50, so it wasn't really a clear setup there from the kind of the odds and the probabilities. Right, I think that's it for this week, Yuri. What do you think? Anything else that you want to add for the viewers?
No, pretty much. It was a quiet week for us. I hope it was for our listeners too, because the market has been liquidating billions of dollars from a lot of people. So if we are quiet, it means we are doing something right. So
Exactly.
that is the best part.
I think I heard it was 1 point something trillion was
Yeah,
lost
it was a
in
lot.
metals, right? And then it was around 800 billion that was lost in the stock market just yesterday alone. So yeah, big losses there. We have been seeing, insiders selling. We've seen even Coinbase. I think the CEO ended up selling some stock, and they had really
Nancy
bad
sold
earnings.
PayPal, so you know it's doomed. Nancy
Yeah,
Pelosi sold PayPal, so you know it's doomed.
yeah, a long time for the reversal to come in. So yeah, I think sit on your hands, wait. Just look for those perfect setups. You don't have to rush in, preserve capital, and then wait for the market to find some support. And then we'll obviously be here sharing our thoughts. And you can also join the community and maybe learn a thing or two in terms of how we trade and how we've been able to outperform the markets the last couple of years with everything that we share there in the community. Thank you, Yodi.
Thank you. It was nice talking.
And yeah, we'll speak next week. Take care.
Thank you.